Hey guys, okay, I trust we're all doing good. You're welcome to my YouTube channel, guys. Let's do some analysis together and um let's see what the market is doing. Let's do some analysis together, maybe with two assets. Yeah, and this is actually going to review to you some of my strategies that you can actually replicate into your trading. You can actually replicate this into your trading, so this is definitely going to help you. So let's analyze together, guys. So this is volatility 101s, and I'm going to be starting my analysis from the higher time frame perspective. So we have 24 hours for this trading view. On this trading view, we have the higher time frame start from the 24 hours. On MT5, which is MetaTrader 5, we have the higher time frame start from the monthly time frame, but trading view is not offering a monthly time frame, and then it is not showing us weekly time frame. So what we have here is the 24 hours time frame. It is not loading up. Okay, it's not loading up, guys. Okay, the 24 hours is actually not loading up, guys. So I think we'll have to make do with the 8 hours. We'll have to make do with the 8 hours. It is just a little replicate of the 24 hours. So let's make use of the 8 hours, guys. So we're starting with the 8 hours. So our last break of structure is actually to the upside. We have our break of structure to the upside here, guys. This is a PMS to the upside. This is a PMS to the upside. Okay, after we've had this PMS to the upside, checking the internal structure, we have a balanced area here. There is a balanced area here. The market has balanced this sponsored candle. The market has balanced this candle also, this base candle. The market has balanced it. We've balanced this area also. This area has also been balanced. The only area where the market hasn't come to test is this area. So we are just going to be marking that out, this base area. The market did not come back to this area, so there's every there is high tendency for the market to come back to this area, to come back to test it. And coupled with the fact that our market has created an inducement to be used to come back into this POI. The market has created inducement. Okay, this is an inducement for us to come back into this area, so we're going to be marking that area out. This is the 8 hours time frame. Also, we have imbalance. What made that area valid for us, what made this area valid for us, is that we had a very high imbalance here. There is an imbalance here. The market might come back to fill. So that is a sponsored candle for us, and then we have our imbalance over here. So market might come back to fill this imbalance. You can see market will not come back to this imbalance directly unless it creates inducement for us. So we have our very valid gap here, and where we are expecting the market is this area. So let's check the lower time frame to see if we can actually get a way to join the market to come back to this area. Perhaps we'll just look for a sell move for the market to come back into our area where we marked out. A lot of people are not really patient for the market to come back to that area and before they trade. Okay, so let's see if we can actually get a sell move to that area. Okay, market has not broken any low. If there's any low, we are expecting the market to break for us to come back to this area first, for us to come back to this area first is this low. If the market breaks this low, it simply means the market is preparing to come back into this particular area. But if we break this particular low, it simply means market is coming back to our PO high level. Now, the market has not broken this, so we are patiently waiting for the market to break this particular low. If it takes this particular low, then I think we're really good to go on selling. Then perhaps we'll just take profits here, and after market has taken out this low, because markets can be very funny, it might not come back to the PO high easily. It might give us another move to the upside. So markets might just get to this area and then give us high again before coming back to our PO high. So the first thing you will need to do is take your profits here, and if the market is displaying an impulsive move, we might be expecting you to take this low as soon as possible. So I think that is that for volatility 101 Hz. It is extremely simple. I mean, it is very, very simple for us. So I think we should analyze another instrument. Let's take volatility 101 Hz. Let's just take volatility 101 Hz and analyze it. So let's start from the 8 hours time frame. Our volatility 101 Hz, we started from the 8 hours time frame also. So let's start this from the 8 hours perspective also. So where is our last break of structure on this 8 hours time frame? Our last break of structure on this 8 hours time frame is to the upside. So what we are looking out for is our buy move. So let's just mark this out. We have our BMS to the upside. This is a BMS to the upside. Okay, this is a BMS to the upside. And okay, let's check the 24 hours if it's going to work for this. The 24 hours if it's actually going to work for this one. Okay, the 24 hours works for our volatility 101 Hz. So yes, we had a break of structure to the upside. So where we are expecting the market, where we have void area that we are expecting the market on this 24 hours time frame is this area. Market to come back to this area. Okay, so when market comes back to this area, then we get our entry confirmation to continue to the upside. Now market is actually making a very good move back to our PO high, so we are patiently waiting for the market to come back into our PO high on the 24 hours time frame. While we are waiting for that, we are going to check the 4 hours time frame and see what the market is doing, and see if there is a way we can actually join the sell move. Okay, this market has given us a break of structure to come back to our PO high, so you can actually get a way to join the sell move. You can get a way to join the sell move. We have a BMS to the downside on this is 4 hours time frame. This is a BMS to the downside, and checking it on the 1 hour time frame. Let's check the 1 hour time frame. If we have any area where we can join the market, it's going to be good for us. Okay, so the market did not test this area. Market did not test this area properly. Market did not test this area properly. Blot out this. Okay, market has not tested this area properly. This is our first outlook. This is our first outlook. Since market has not tested it properly, then our second outlook is here, this particular order block. That is our second outlook. Market might come back there and use the movement to continue to the downside, just to come back to our PO high. This movement is very impulsive, and if you can get an entry there for a sell, it's really going to be amazing. It's definitely going to be amazing, because you're going to get a good number of pips to come back to your PO high. You're going to get a good number of pips to come back to your PO high. So this is for volatility 10 1s, guys. Trading is not meant to be hard. It's very simple. All you just need are some basic rules. You just need basic rules to be able to join whatever the market is doing. You just need simple rules to join whatever the market is doing. So let's do one more analysis before I put an end to this video. Okay, I think we should do volatility 25. Let's do volatility 25 index analysis and see what this particular market is doing. Okay, I took this buy in the middle of the night and I'm out already. I'm out of this buy already. So let's see what the market is actually presenting to us. Okay, no, on the 24 hours time frame. This is the 24 hours time frame. Now where we had our BMS, our last break of structure is to the downside. Yeah, guys, our last break of structure is to the downside. So where are we looking forward to for the market to come back to in this area for us to continue the sell move? Because obviously this can be our inducement high. This can be our inducement high for the market to come back into a good area in the market, and then it should continue selling. So based on this 24 hours time frame, it is telling us we are balanced, but I am not believing that. We have to go to the 8 hours time frame. Let's check the 8 hours perspective. Okay, I was expecting the market around this area, but it did not get there before moving, before buying. So on the okay, this is the 8 hours. So what do we do here? What's the 8 hours telling us? Okay, so where we had our last break of structure on the 8 hours is here. Our market did not come back. Our market did not come back into this area. So definitely the market might be coming back into this area. So I'm just going to be marking that with horizontal ray. So I'll be marking this with horizontal ray, expecting the market to come back to that area, to this particular area. And then I look for my sell continuation, because obviously the last break of structure is to the downside. So what I am looking for is a continuation to join this sell. That is what I am looking for, a continuation to join the sell. Hold on, guys. I'm looking for a continuation to join the sale. So definitely what I am doing is marking this area out and waiting for the market to get there and give me my entry confirmation. And as you can see over here, the market is almost there. The market is actually almost there. So what I will just be waiting for is for the market to get into that zone. Once it gets into that zone, I'm just going to look for my sell opportunity to take off external liquidity. And trust me, if you can get an entry at this area, you will get a very good number of pips, because our target is going to be this low. This is going to be my target. Let me show you guys. This is definitely going to be my target, this particular low. This low is going to be my target. Imagine joining the sell from that angle, and market might break structure to the upside, but I am not expecting it to break into the upside unless I'm not expecting a buy unless we take this high. So after we've taken this high, then I can start changing my bias that okay, the market is now bullish. I can change my bias that the market is now bullish. So what I am still doing is expecting the market at this PO high. The market is almost there, so there's no need to jump into the buy again. There's no need to trade continuation to jump into the buy. Just wait for the market to get to the PO high and then get your entry confirmation, and you are good to go. You don't need stress. Trading is not meant to be hard. Just follow some set of rules, and that is it. So that's going to be all for now, guys. Thanks for joining me in my analysis. Thank you. And if you have any other opinion, or you feel the market is going to do any other thing, you can join my Telegram channel to be able to drop your bias and then be able to say your mind and every other things. You can join my Telegram channel. I'm going to drop the link in the description box so that you can join. Keep living in the atmosphere of profits, guys. I'm going to see you in my next video. Bye, guys.